Namaste, welcome to Arthaniti, where we discuss money and money related tools for investing in your everyday life. My name is Shefalika Gokhale, and I am a PhD in business practices of mutual fund houses. In today's podcast, we will be discussing about whether gold as an investment will glitter in 2024. Now, in this particular episode, we will discuss how various factors like inflation, like changes in monetary policy, for example, rate cuts by various central banks, or geopolitical tensions, buying by central banks of various countries, possibility of recessions in various countries, how these factors will have positive or negative impact on gold prices in the coming year. This will be the focus of today's video. Now, when we talk about any investment, the investments say that we do in mutual funds or equity shares or real estate, fixed deposits, government schemes, correct? We look at those investments from the amount of returns that those investments generate, either capital appreciation or regular returns, say by way of interest or dividend that those investments help us gain. Correct. Now, traditionally in India, gold has always been for keeps. It has never been looked upon as an investment where, after achieving a certain level, when the price of gold appreciates to a certain level, gold is sold off. Correct. Traditionally, we have been keepers of gold as a family asset, as family wealth, which has been passed on as heirloom from generations to generations. Correct. But what has changed is, nowadays, instead of buying gold in physical form from a jeweler, which is a completely different story altogether, with the kind of hallmarking and reductions charges that the jewelers cut when you go to sell a particular jewelry, with digital gold options, gold mutual funds, sovereign gold bonds, correct? The various other gold avenues that have come forth, where you do not have to keep physical gold in order to invest in it, have increased the demand for gold, not for not as a heirloom which is to be passed on from generations to generations, but as an investment option wherein it is looked upon as a hedge against uncertainties. Now, this has been a change in looking at gold as an investment option in India. Let us look at the first factor, which is inflation. Now, when inflation rises, the purchasing power of money reduces. With the same amount of money, you would be able to purchase less goods and services as compared to when the inflation was low. So, purchasing power of money reduces when the inflation rises. In comparison, gold retains its value. So it becomes an attractive investment option when inflation is on the rise. Now, in times of economic uncertainties, what happens is gold is looked upon as a safe haven. Correct? Looking at what actually inflation figures are have been declared. In India, the inflation is slightly reduced for Jan 2024 at 5.10% as compared to 5.69% in December 2023. If we look at US figures, the inflation in December 2023 was recorded at 3.4% versus a slight reduction to 3.1% in January of 2024. So, inflation is there are signs that inflationary trends which were present around the economies are cooling off slightly. So, inflation as a factor is reducing in various countries, including in India. The next factor which has an effect on gold prices is the probability of recession. Now let's start with the basics. What is recession? Well, negative economic growth in any country for two consecutive quarters, which is for 6 months, the country's economy is set to go into recession. Japan announced few days back that the economy had slid into recession, which was followed by United Kingdom. Now, when there is recession, there is a general tendency that the economic activity, the give and take of goods and services, the demand and supply of such goods and services is normally very low. When there is such uncertainty, investors tend to look out for less riskier assets. And what better than gold to fit that bill? Correct? So, when there is recessionary probabilities, gold, the demand for gold increases. Now, U.S. economy, which has seen steady interest rates by its Federal Reserve. Uh, there are possibilities that the Federal Reserve might reduce these interest rates in the coming months. Now, how are interest rates related to inflation and recession? Uh, Let me explain quickly. See, interest rates, when they are on a higher side, when the central bank has fixed the interest rates on a higher side, what that means is tightening of credit. The availability of loans and money to the industry is held back because of higher interest rates. Now, why this is done? This is done to curb inflation. This is done to curb demand, to slow down economic activity. And vice versa, when rates are reduced, when the central bank reduces interest rates, what it does is it eases its monetary policy. The credit availability in the market is eased. Industries can easily take loans which are available at a cheaper rate. So it is a booster to the economy. It is a booster to for the economic activity to grow. Correct. So it is a balancing act that all central banks do. If they keep the interest rates high for a longer period of time, what happens is the economic activity slows down to such a level that there is a probability that the economy would slid into recession. So they have to balance correctly in such a way that inflation is tamed but economy does not go into recession. At the same time, the rate starts reducing. The reduction cycle is also decided in such a way when inflationary pressures are low, so that credit is easily available and economic activity uh, rises in the economy. Now, one question should come in your mind: why am I referring to US when I am talking about all these factors? Well, simple reason for that is the US dollar is still the reserve currency of the world. Now, if the US dollar crashes, when will that happen? When there is recession and the purchasing power of a dollar reduces. Now, when that happens, obviously the demand for gold will go up. Why? Because it is one of US is the biggest economy in the world. Also, the dollar is a reserve currency in which most trade between the countries still happens. That is why what happens with the US economy is very important when we are thinking about gold investments. So we spoke about inflation, we spoke about recession. The next is the monetary policy of a country. What decisions the central banks of countries take vis-a-vis their interest rates. As I have already explained previously, interest rates are generally kept high when there are inflationary pressures. Why? To bring inflation under control. Once the inflation starts reducing, the central banks also start the downward cycle of the interest rates. In the sense, they start reducing the interest rates to make credit easily available in the market, so that it boosts the demand and supply in the market. It boosts the economic activity. Now, we have to keep a close eye on what decisions the central banks of countries take. Now, in India, the rates have been kept steady for some time, and I have already told you about the inflation numbers. And like the probability of the US Fed reducing the interest rates, it is being predicted by that in the spring of 2024 in the US, the Fed might start the downward cycle, that is the reduction of interest rate cycle in their country. Now, when interest rates reduce, what happens? The rate on fixed interest earning securities, government bonds, also goes down, and the demand for gold rises. Understood? So when there is a possibility that the less riskier investments like fixed deposits and bonds start earning lower rates of interest, people will shift their money from such investments to a safer other option, which is gold. So this is how interest rate cycles affect gold prices. The central banks of countries are one of the biggest buyers of gold. Now, what are central banks? Like we have Reserve Bank of India, there are central banks of each countries. Now, for 2024, the Central Bank of China was the biggest buyer of gold. It has roughly 2,235 tons of gold in its reserve. One specific reason for this demand is that gold does not lose its value, correct? It is a physical metal which will not lose its value if the currency is devalued. That is one of the reasons why central banks are heavy buyers of this metal. Last but not the least, geopolitical tensions also have an impact on gold prices. Why? Because more the tensions, more the uncertainty, and more the demand for a less riskier investment option. Now we know that there is already two wars that are happening in and around us. One is in Eastern Europe, between Russia and Ukraine, and the other is in the Middle East between Palestine and Israel. There is a small disruption in the Red Sea as well, where the route through the sea route has been blocked, and armies of different navies, I'm sorry, of different countries are aggressively fighting those Houthi rebels. Correct? Now, more such geopolitical tensions around us, more will be the demand for this glittering metal. Well, these were some of the important factors which impacted the demand for gold. If we keep on following news and what is happening around us, we can easily surmise the probabilities of these factors, whether there will be inflation in the coming future, or inflation will start easing, whether countries will slip into recession, what is going to be the uh, actions by central banks with regards to their interest rates, and geopolitical tensions are in and around us. Well, if we follow what is happening around us, we can easily gauge where these factors stand, and we can take a call of whether it is the right time to start investing in gold. One thing is certain, maybe we cannot pinpoint a particular date, but in the coming future, in the near future, central banks in countries all around the world will start reducing their interest rates so as to mm, um, ease the credit availability in the market and boost economic activities. So that is that is something which will happen in near future, though exact dates, pinpointing on those dates is not possible. Correct. So see, these factors would affect the demand side of the gold. But it is simple basic economics that to fulfill the demand, there has to be equivalent supply in the market. Correct. If there is not an equilibrium between the demand and supply, that affects the prices of gold as well. Well, here are some numbers that I have taken out from the World Gold Council report. The total gold supply that happened in the world in 2023 rose by roughly 3% year on year basis. Now, these figures are for 2023. Correct? The total production, the new gold that was mined in 2023 stood at 3,000 metric tons. The various industries in which gold is in high demand now, uh, this is jewelry being the prominent industry. More than 50% of the gold that is produced, the demand is from the jewelry industry, followed by demands or requirements of central banks around the world and technology. Well, 80% of the demand in the in the technology industry is from electronics sector, where gold is an irreplaceable metal in some of the electronic components. Correct. Now, where does this gold come from? Now, it is mined. Murantau gold deposit in Uzbekistan is said to be one of the biggest gold mines in the world, followed by Carlin in the US and Grasberg mine in Indonesia. Now, there are many more mines, but these are some of the biggest mines. These names are of some of the biggest gold mines in the world. Correct. So, what does economics say? The simple law of economics is when the demand rises, but the supply of gold does not match that demand, the price of gold or any commodity tends to go up. When the supply is higher than the demand, the price of the commodity tends to go down. Keep this in mind. So, you know where and how the prices of gold change. Correct. So basically, looking at these factors, following the news, the current affairs, you will be able to understand whether investing in gold should be on your priority list. Now, ideally, how much percentage should you invest in gold of your total portfolio? Okay, not more than 8 to 10% should be invested in a particular concentrated sector like gold. Why? Because see, it is a hedge against uncertainty. But if you predict that it is going to be the end of the world, do you think gold will suffice or will come to the rescue when you need, when you are hungry and you need food, or when you are thirsty and you need water? Obviously, you will not use that gold for fulfilling your thirst and hunger. Correct. If that is going to be the end of the world and you are of that opinion, then gold will surely not help you. You will need basic necessities like food, clothing, and shelter. But predicting that end or such a pessimistic view is unnecessary. So, hedging against these uncertainties, which we are in no position to predict, pinpoint correctly, we can safely invest around 8 to 10% of our portfolio in this asset. Correct. So, let me know if you have any queries, any questions regarding this investment option, and I will be happy to address those queries. And we can like have another discussion on this. One thing that I missed out in this video was where and how can you invest. Most important part, right? uh, See, physical gold we always buy jewelry, and which we do not intend to sell in our lives, correct? Hopefully the situation should not arise that we have to sell our personal jewelry. So, when you invest in gold, what are the other mediums through which you can safely invest in this metal? See, digital gold, in the sense, you can buy mutual funds. There are various mutual funds available in the market, say HDFC Gold Fund or DSP World Gold Fund, where they invest not only in mining companies but ETFs. They are basically exchange traded funds of these gold funds, which are listed not in India but in other countries, correct? So you can have digital investments by way of purchasing mutual funds. Sovereign gold bonds is also a very attractive investment option, which the government of India has announced. Now, with the interest rate of 2.5%, these gold bonds have a maturity date of 8 years. The For 1 gram of gold, the investment is somewhere around 6,100 odd rupees. But you need to have a demat account to purchase these bonds. The bonds that recently got matured in 2024 gave a return of 13.6%, and these returns at the end of maturity are tax free, correct? So that is an amazing return that these sovereign gold bonds, which are backed by government guarantee. So these bonds, the issue might not be open now, but you can always purchase these bonds in the secondary market. So these bonds are also a very good investment option if you are planning to invest in gold. Right, so that point is covered, and I hope this was an enriching video which gave you perspective about gold as an industry and an investment option. If you have any more inputs which you think I have missed out, and which can which our users or viewers can gain from, please write so in the comment, and I will be happy to share it in my next video. Also, any queries, please comment below the video and we will sort that out. See you in the next video, and do not forget to follow and subscribe to my channel for more such interesting investment videos. Thank you so much.